Are you not sure if you want to invest in Bitcoin or some of the coins? Well, today you're going to figure it out because we're going to discuss top 10 pros and cons of cryptocurrency. Hello everyone, this is Mary Brooks Crypto. Welcome back to my channel. So every day cryptocurrencies are becoming more and more popular. The volatile market for cryptocurrencies is an exciting place, but is it a place that you should be in? Here's what you should know before you dive in. As we all know, the world is becoming more and more economically unsafe every day. So let's take a look at some of the improvements that can be made to fiat currency by shifting towards digital cash. Low transactions costs. One of the most important pros of cryptocurrencies is that they have generally low transaction costs. Unlike other electronic payment systems like PayPal and money transfers with banks, which tend to have expensive fees, cryptocurrencies generally have very low transaction costs. Peer-to-peer trade effectively eliminates the intermediary bank or financial institution, making the entire process more streamlined as a result. It all comes down to blockchain technologies and the way the cryptocurrency exchange hands, allowing for much cheaper transfers to take place regardless of the sum in question. Fast and secure transactions. Cryptocurrency transactions generally process quicker than checks and banks facilitated money transfers. All transactions are final as soon as they're recorded in the permanent transaction blockchain. With cryptos, you don't need to wait a couple of days for your business to receive the money because blockchain technology removes delays, payments of fees, and a host of other third-party approval that might have been present. In addition, cryptocurrency payments are more secure as a whole due to the blockchain tracking of each individual coin and wallet, eliminating fraud possibilities. This will ensure that your funds are available as soon as possible in a safe and user-friendly manner, unlike with banks and similar financial institutions which take time to process each request. Privacy. In cryptocurrencies, you're able to create an infinite number of wallets without reference to the name, address, or any other information. When you give your credit card to a merchant, you give him or her access to your full credit line, even if the transaction is for a small amount. Credit cards operate on a pull basis, where the store initiates the payment and pulls the designated amount from your account. Cryptocurrency uses a push mechanism that allows the cryptocurrency holder to send exactly what he or she wants to the merchant or recipient with no further information. Peer-to-peer cryptocurrency network. The only way your money can be accessed is by your private key, essentially a cryptographic password that only you know. This means that no bank, corporation, or central government can freeze your assets. Keeping an amount of savings in cryptocurrency can be a way to insure yourself financially. Cryptocurrencies do not have any master server to manage all transactions. Exchange of information is between 2, 3, or more software clients. All installed by users, program wallets are part of a crypto network, and each client stores a record of all committed transactions and the number of crypto in each wallet. Transactions are made by hundreds of distributed servers. Neither banks or taxes nor governments can control the exchange of money between. Recognized universally. As cryptocurrency isn't bound by exchange rates, interest rates, or other charges of any country, it can be used at an international level without experiencing any issues. This is an advantage as it saves a lot of time as well as money on any business part that is otherwise spent on transferring the money from one country to another. This universal recognition allows it to make transactions easier. So these were top 5 cryptocurrency advantages, but as we all know, there's the other side of the coin, and I'm talking about the disadvantages of cryptocurrency. So let's break those down. Volatility. Since from the beginnings, cryptocurrency have a highly volatile nature. This means that some people have made quite a bit of money when the price of cryptocurrency, for example Bitcoin, skyrocketed, and others have lost just as much when the price has crashed. It's kind of a trust killer as you can never be 100% sure how much the crypto is going to be worth tomorrow. This is one of the main reasons why mass adoption is taking longer than it should. Many corporations don't want to deal with a form of money that is going to go through huge swings in volatility. that being said, it's likely that as cryptocurrency increases in popularity and more people use it, this volatility will level out. Criminal uses. There's no doubt that digital currencies provide benefits to individuals, financial organizations, governments, and public sector institutions by facilitating better access to financial products, aiding financial empowerment, and reducing the risk of corruption and fraud. But one of the most significant risks associated with the digital currencies is the ability of criminals and terrorists to use these new technologies for their own benefit. Unfortunately, the characteristics of Bitcoin that many people innocently enjoy, relative privacy, ease of international transactions, and others, are also the characteristics of Bitcoin that happen to benefit criminal enterprises the most. For example, there have been serious concerns raised that Bitcoin opens opportunities for criminals to partake in illegal activities like money laundering, terrorist funding, and the exchange of illegal goods and services, for example, drugs. Bitcoin was not created with the intention of being compatible with criminality, but its increased use by criminals is something that certainly cannot be easily ignored. Cybersecurity issues. When you lose value in your bank account because of fraud or other illegal activities, then there are insurance policies and protections in place that reduce or eliminate your liability in this area. When fraudulent charges occur on your credit card, reporting it immediately quickly reduces your responsibility to manage that situation. Cryptocurrency has a different outcome because there is no system in place to protect the value of your coins. There isn't a way to recover your wealth if something happens to the system or if someone steals value out of the wallet. Cryptocurrency hasn't reached mainstream economics yet to offer these protections, so you're on your own to keep your value entirely protected. No way to reverse the payment. If you mistakenly pay someone by using cryptocurrencies, then there is no way to revert the transaction. Once a cryptocurrency transaction had taken place, it's statutory. You can't roll back the transaction at any cost because of its permanency. As unfortunate as it is, cryptocurrency transactions on the Bitcoin, Ethereum, and Bitcoin Cash networks are designed to be irreversible, and we have no control over them. Knowing this is extremely important to make sure your transaction details are correct before you click send. And all you can do is to ask the person for a refund, and if your request is turned down, then forget about all the money. Lack of knowledge. Cryptocurrency is a digital currency based on a rather complex blockchain technology. This technology was introduced into practice in a large scale just a few years ago, and without understanding the details of cryptocurrency, it's unsafe to deal with it. And a lot of people end up investing with cryptocurrencies without proper background knowledge and thereby lose money to something that they did not learn about. One should understand that the technology is somewhat complex in nature and it requires a thorough understanding before you make a mind to invest. Thank you for watching this video. Tell me in the comments what's your favorite thing about cryptocurrency. Like this video, subscribe to my YouTube channel, Instagram, and Twitter if you want to see more updates, and I'll see you very soon in my next video.